Welcome back to the deep dive. Today, we're jumping right into a scenario that I think we all feel in our gut. The market dip, that moment when everything seems to be seizing up.
Yeah.
And our mission for this deep dive is to look at how smart money behaves in those moments, to really challenge that common story about total financial collapse.
And that story gets so loud. I mean, the source material just captures the feeling perfectly. It recalls that sentiment. They said the economy was crashing. They said panic.
Right.
And fear
Yeah.
it is probably the most viral thing on the planet. When those headlines start flashing red, the impulse is just to run.
And running is what we're told to do, in a way. The story is always about destruction, right? Everyone loses. We're all worse off. But this source, it has this sharp, counterintuitive idea that we really need to unpack. The idea that recessions don't actually wipe out wealth, they transfer it.
Yeah.
So we need to get into the mechanics of that. What does it actually mean to move different when all you see is red?
And that phrase, move different, that's everything. It suggests there's a whole other playbook that isn't based on fear.
A completely different strategy.
Exactly. If a recession is a game of wealth transfer, then we have to understand the playbook of the people giving it away versus the people, who are ready to receive it.
Okay, let's start there. Let's start with that universal reaction. The market's dipping. The noise is it's deafening. What does our source say most people do?
It's pretty simple and debilitating. They either freeze or they freak out.
Right. Paralysis or panic.
And that emotional response is totally driven by what the source calls the public noise, when the noise gets crazy. If you look at this through a behavioral economics lens, it's just classic loss aversion.
Explain that a bit.
Well, people feel the sting of a loss way more intensely than they feel the pleasure of a gain.
Yeah.
So their brain just tells them, stop the pain. Now,
Even if that means selling at the absolute bottom.
especially then.
I think we've all felt that freeze, though. You look at your portfolio, it's dropping, and your brain just locks. You do nothing because you're scared of doing the wrong thing.
It's an emotional hijack. And that's the real contrast the source is drawing. While everyone else is panicking, smart money stayed calm.
But staying calm isn't just sitting on your hands, right?
No, not at all. It's the opposite. It's the prerequisite for taking action. The source says when the market dipped, they leaned in.
Leaned in. I like that. It's like moving against the current. Everyone is running for the exit, and you're walking calmly toward the fire.
And that takes a huge amount of counterforce. It takes discipline.
Oh, okay.
The source makes this really critical point. It says fear is easy. It's the default. But discipline, that is rare.
So discipline is like the firewall against all that noise. It's what lets you stick